All right, today's video, I wanted to go over this because we were talking about investing money, right? So, if you got 100,000, 200,000, $500,000 sitting in an account, thinking about investing it, you need to put that money to work. Maybe you have, whatever. But the big question is always, how much uncertainty can you take over a long period of time with your investing, especially when you're putting money at risk? That's your hard-earned money, man. You did it. You work for it. You have a business. You work your ass off like everyone else. You want to take care of your family, and you want to be taken care of, right? Depending on where you're at in life. Maybe you're 40, 50 years old. Maybe you're 35, 30 years old, and you're thinking ahead because you got all this information now and you're looking at your own business and you're watching other people in front of you and go, dude, I don't want to be them later. Dude, that was me years ago. So the thing that I want to go over with you guys, and you guys may have heard me talk about this, but today's different because we're talking about uncertainty in your investments. All right. You don't want to be uncertain, right? I'm going to uncertain. I don't want uncertainty in my company, with my money, with my investors' money, none of that stuff. So I wanted to kind of go over this because I was talking to one of my buddies through text. He's in stocks, a couple of my other buddies, they do a lot of stock, and they're always playing that game, man. And I see it and I'm like, dude, that's sexy. But it's not my game. And it never has been, be honest with you guys. Even the real estate that I bought when I was buying smaller deals and looking at small properties, they were still really good deals. Like they were like, dude, how'd you get these deals? And I'm like, I like nicer stuff. And I'm probably getting less stuff because I'm only going after the good stuff, great locations, great markets, higher price stuff. So it's, I know that I'm going to win when I exit the deal. That is so important when you think about where do you want your money to be? What, we talk about it. What do you want your money to do? Well, first, I 100% know if you say, hey, what do I want my money to do? You ain't never going to put, I want it to be uncertain. I don't want to know what's going to happen in the future. That's bull. All right. So number one thing, and these are places you can put your money. And I want you to think through this because I'm going to go over it a little bit, but it's going to be a quick training. Trust me. All right. So the number one place that you can put your money, you can put it in stocks. Like I said, my buddies do this. And you got to ask yourself, is there uncertainty with stocks? If I were to put my money in and leave it in, and I know some of you guys are like, well, I could do a call and I could do a put, and I'm buying stock options and I'm following what's happening. That is not investing. That's gambling. You have to, one, you got to show up, play that game all the time. There's a lot of people make a lot of money in stocks, just not my game. So I'm not hating on it, but it is what it is. But when I think through putting my money someplace, laying my head down at night and going to sleep, I don't have to worry about whether something happens halfway across the globe to my shares, my stock, and what's going on, right? So that's number one. Stocks, number one, they don't check the box on a lot of stuff. Do they cash flow? Do they preserve capital? Is there appreciation? Some stocks cash flow, they don't really cash flow, they do dividends, but you can't buy a big enough stake in those to really to hit a win, to score, right? Do they hedge against inflation, right? Can they be disrupted? When you're buying stocks, they don't check those boxes. So therefore, there's a high level of uncertainty in there for me. Next one, cash. This is where cash, and I'll put savings. Again, this is another one. There's uncertainty with money right now. The how much the dollar buys continues to go down, right? Inflation continues to crush us. It's all over the place in the news. Everything that people talk about is inflation, bringing inflation down. Like, therefore, even if you left your money in the bank savings accounts, banks are like paying like, I don't know, 0.002. Like, you can't keep up with it if it's just in regular savings. And some of those people are like, no, man, I'm getting 3, I'm getting 4. Well, you're still going to get taxed on your gain at some point. Like, you're still not getting what you thought, and you can't keep up with inflation. Like we talked, like I think it was like 2020 and 20, the value of what your dollar buys went down by 25%. That's crazy. In my lifetime, the buying power of the dollars went down 86% since 1973. So when I think through the uncertainty of where my money needs to be to grow, it isn't in stocks, and right now it's not in cash. It needs to be in something else. So these are the assets. These are the assets where you can have your money, right? So next, we go through retirement. Retirement accounts. So that's your IRA, 401k. 401ks. You see that? Good. You can. Is this your 401k, your IRA? Yes. You're putting your money in a retirement account, your IRA, 401k. But that money also, you don't know where that is. That's in mutual funds, it's in different stocks. It's been handled by some other person. For one, this was a, if you really go back and you take a look at the finance industry, you understand that retirement accounts and those things were financial products, instruments created by Wall Street and the tax code and the IRS to say, hey, look, let's get people to lock their money up. We will trade that money. And then hopefully at the end, there'll be some money left over. And oh, by the way, we'll tax them then. So some of you people are like, yeah, well, I put my money in it and it's tax free or it's tax deferred. Yeah, eventually you're going to have to pay your taxes. And when it does come out, it's going to come to you and it's going to come in as ordinary income, right? Or earned income. And it's going to raise your tax bracket, I promise you. And you're going to get taxed on that. So even if you're not paying taxes on it, or if you prepaid it, you pay taxes and you put it in, you're going to pay taxes again on it. So, I mean, it's a ridiculous thing. You do need to guide where you're at. There's a high level of uncertainty. And be honest with you, if you're 40, 50 years old and you're grinding it out right now, you probably should be able to put your money in a place where it's going to grow as quickly as you do over time. So you can at least self-direct it, right? That's super, super valuable to kind of remember that as you think through, hey, there's a level of uncertainty in all these investments. All right. What's the other one? Crypto right now. BTC, Bitcoin. This one right here is a little bit more, there's still a level of uncertainty. It's going up right now, but you can't do that forever, right? It doesn't pay cash flow. It's not kicking out a dividend or anything. It's just going up and going up, going up. So yes, this one right now is nice and hot, but is it always going to be hot? Probably not. You don't know. And if it does, then are you going to be able to maximize the gain on it in the future? There's so much uncertainty with being able to look at, man, can I guess right now? Because it's digital, because it's new, because people are getting into it, because the big boys are getting into it. Trust me, it's going to get a little bit tighter pucker factor for the little guy to stay playing this game. And because there's so much uncertainty in it, kind of makes it questionable. Now, this next one, I'm going to go over this one. And this is where I used to play, and I know this. Houses. But when I talk about houses, I'm talking about investing in houses. There's a couple of different ways you can invest in houses, and we're talking about the strategy of real estate investing. The strategy of real estate investing is a little different. You can fix and flip, because people think that's what I used to do. Which I did not do fix and flips. I don't like fixing stuff. I did subs-twos and creative financing. You can do that. You can do Airbnb. I'll just do Airbnb that way. You can do Airbnbs. People like doing those things. Again, it's another strategy, which are basically it's vacation rentals. It's short-term stuff, right? You can wholesale. You can wholesale these deals. I personally, basically wholesaling at some point when I got started, it was called assignments contract. You just assign your contract to somebody else, but it's the same thing, right? So, or for any other way is like creative financing, which, you know, the sub-twos, the seller carry. But I'll be honest with you, man, as a business, we're talking about doing real estate. These are just the strategies to be able to do it. Trust me, there's a lot more. There's you can do like rent a room to students, you can rent a room to older people, you can do like assisted living, like for a house and for this and that and next. You can do subdividing, you could do ADUs. That's another one right now that everyone's in. ADUs, and you can just do straight rentals. You can just buy a single family unit or a little small fourplex, duplex, triplex, and you could just rent them out to Section 8 people or regular people, whatever. These are strategies. But I can tell you, when you go back to the level of uncertainty that we were talking about, we're talking about, hey, can you fix and flip a deal? Yeah, you can buy one. You can buy it cheap, turn around, sell it. There's a lot of people right now that bought fix and flip deals that cannot get out of them because they got short-term loans, hard money loans, private money loans. They got investors and like, dude, the market is slowed down. And if they do, they make money. They got to turn around and do it again. A lot of uncertainty and stress. Stress. Do not be stressed. Stress is just another word for uncertainty. The Airbnbs, I never did that. I had a house that we had rented out to some students. So rented per room, which is how I met a couple of good people near college towns. That's good. But at some point we had a duplex. Downstairs was a bunch of students renting out per room, hanging out, bothering my tenant upstairs. And eventually I just let the students not move back in. I just canceled that and then had the person take over the whole place. Man, it was a headache. It was every month. It was like, shit, are they going to pay? Wholesaling. I did wholesales in the beginning, only one or two. It was tough to be like, hey, I'm going to find a deal, make sure all the numbers work, and assign my contract to somebody else and hope to make $5,000, $3,000, $2,000. You aren't making that much money wholesaling deals, man. Even if you get a score, let's say you wholesale the deal and you made 25 grand, which I've done, you still got to do it again, man. It wasn't even this is not even real estate. It's paperwork. You're hustling papers. So, and then basically the creative financing strategy, you got to find a motivated seller, somebody who needs to sell, somebody who's extremely motivated to walk away from a deal, to do seller financing, subject twos, which my single family house businesses were all subject twos. I'm the king of subject twos. I've done more than anybody that I know. ADUs is pretty new. They've basically just taken the government's like, yeah, here you go. We have a housing problem. We're going to let you build more dwelling units, additional dwelling units on this place. And it's going to do what I said over here with your student housing. You're going to, those other people on those additional locations by your house are going to run away the good people. And last but not least, just rentals. You got to handle the tenants, the toilets, the termites, fixing up stuff. If a tenant complains, you got to deal with that, depending on how many tenants you have. The onesie twosies. Man, there's a lot of uncertainty in this list, if you guys didn't hear it. Right? So all of you people who are doing this, I'm doing great. You talk to a real investor over time. Aside from what they tell you publicly, remember there's two conversations. There's a one you say in public, and there's a one you say in private. So if you're an athlete, it's the, hey guys, it was a great deal. It was a great game. The team was awesome. The coaches are awesome. We just want to appreciate. That's the media conversation. The real conversation is like, dude, that was a shit show. We needed to fix this. I was struggling. My knees hurting. My back's hurt. Like, you start hearing the real story from these guys. All right. I just happen to tell real stories publicly. Not everyone likes that, but whatever. I don't need to sell you guys on anything. I'm trying to help you guys multiply and make money by investing. Big difference. So that's this. Again, we go right. That was back from the uncertainty. And now we go on to my other one, which are people who have businesses. Businesses. Now, the other one, businesses make a lot of money. If you're going to invest more money into your business, that's great. But you also have to hit your marketing. You got to do sales. You got to do, I'll make that an A. You got to do administrative work, which is all your planning. You got to make sure your sales teams are good. You got to make sure your marketing people are good. Now you got to deal with branding. This is your own business. Now, let's say you bought a business, because other people are like, yeah, you could just buy an existing business. Yeah, you can. You can buy an existing business. And now you have investors, right? You have investors in buying another business. You got to also make sure the marketing is good. I talked to one of my buddies who they got their company that they were dealing with got bought out by a hedge fund. And they went to one of the events that this company they worked with prior to that used to were holding. And they said it was totally different. A lot of big heavy push. Like, once you start bringing in investors and you start acquiring an asset, for all you people out there who are like, we're going to acquire a business and it's going to make a shit ton of money and I'm going to make a bunch of money, there's still work that needs to be done. So there's a lot of uncertainty in your investments, which is why, I mean, I'm starting to see a lot of it. A lot of people invested a lot of money in a bunch of different things right now, and they are not making money. And if they are, it was short term. It was getting less. It's getting more. It has huge influxes because people have accepted that it's going to be great forever. They didn't adjust for what we talked about initially here. Do you want uncertainty in your money? Uncertainty doesn't start the day you start. Uncertainty starts later, and you need to have some consistency. All right. So this is the business. Do businesses work? Absolutely. Could you throw money in your own business? You're already uncertain. So why have two things that make you uncertain? Now you got money already making. You took your savings or whatever it was, you dumped it back into your business before more uncertainty to not know. That's possible. Yeah, at least you can control it, but you can't control it forever. So the things that you need to be focused on, at least for us, when we think about investing money, number one thing I'm always looking at is the deal. The deal. Number one, so important. So the multifamily deals we look at, the things that we're always looking at is number one, preserve capital preservation. Don't lose money ever, right? So is the deal big enough to make sure we don't lose money? Let me see if I can pull up the deal real quick. And let me see. I just pulled this one. I was just looking at this deal. Boom. Hold on, guys. When I'm doing something live, I'm doing something live. There we go. For example, like this deal. You see that? That deal. That's a deal that is, this deal's not going to lose money. Like, we're just using this as an example, right? Do you think this deal is going to lose money? There's enough scale there. That's a huge asset. It's new, just finished being built. That's a deal. So when I think through, hey, if we took our money out of the bank, and we put our money into this deal, we put money into that deal I just showed you, right? This one. Do you think over time do you think this deal you're going to lose money? Think you're going to have some instability in this deal? Absolutely not. People are going to still live in this property. They're going to pay on time. The people who live in this property probably, well, not probably, they do make a lot more money. It's not going to be Section 8. It's not going to be low income. The rents in this property are still affordable in comparison to the market around it. So right away, we know there's not going to be a lot of inconsistency. So there's a lot more certainty in that deal than stocks. There's a lot more certainty in that deal than leaving my cash or my investors' cash sitting around. There's a lot more certainty in that deal than being in a retirement account, 401k, or being in crypto, or playing this game, the hot potato. Which one should I do? Well, if I'm going to do a house, or if I'm going to do a small apartment building, or if I'm going to buy some land, like there's so much more uncertainty versus that deal I just showed you guys, or the business. You don't have to market, you don't have to sell, you don't have to do administrative, you don't have to do branding. Your money's in that building, and that building continues to produce year after year, decades. That building will be around longer than us. Next, does it cash flow? And I know I'm going long on this, but I want you guys to really get this. This is important. So number one, preserve capital. Capital preservation. Does it preserve your money? Number one thing that we're looking at to keep out of it, so there's no uncertainty. Uncertainty. No uncertainty in this deal. No. I'll make sure to write that there. There's no uncertainty in this. In the deal, it preserves capital. Next, it cash flows. Right away. Because cash flow is important, because if something cash flows, you can keep it, right? So then, does it appreciate? Does it appreciate over time? There has to be some way for the value of that asset to continue to go up. And I can tell you, if you can continue to increase the rent, the revenue on an asset like that, because that's like buying a building or buying a business, then the value of the property goes up. It's not like a single family house or some smaller deal. These big properties, these business level multifamily assets are valued off the revenue, the income, right? The NOI. And then the other piece is the tax benefits. Can we benefit from the tax benefits? There's a higher level of certainty in these things. There's other things too, right? So you figure your preserve capital, you got cash flow coming in, you got appreciation, the building will appreciate, you got the tax benefits passed on to you, right? So you keep more of what brought in from the cash flow and any upside of that. Now, it's hard to disrupt. It's hard to disrupt that asset. Think about that. I'm gonna bring it up again. You tell me. On this asset, this one specifically, can you guys see that? That is not going away. Your cell phone cannot make that go away. Like the AI is not going to make a property, an actual real asset, steel and glass go away. It'll make it more advantageous. Maybe you can contact people better. You can ask better questions about moving there and living there. But that asset is not going to be disrupted. It's not going to easily go away. That thing's massive. That's a couple hundred units. All right. And then next, for inflation, which we talked about, inflation, it's an inflation hedge. It hedges against inflation. Why? Because it continues to go up. If inflation goes up, rents go up, the cost of goods go up. So the valuation of those assets like that continue to go up. So it takes away the uncertainty of, hey, my money's locked up in this asset. And because of it, I'm also riding the wave up for everything else. And the last but not least, scale. Is it big enough to hedge against losses? So this deal, there we go. I'll bring it a bit closer. Like, there's enough scale here. All those areas up here, these are all units. This is just one side of the building. There's more. Let me see. Let me see if I can go down. I don't want to spend up too much time showing you pictures. This is the outside here. This is the view from there. Inside, they always have these kind of pictures. This is the pool area. Think about that. There's scale here. Do you think so? Let's just say there's 200 units. This property could lose 10, 20 units. Out of 200 units, 20 units can be down and vacant, and you wouldn't even know. It would not affect your investment in that capacity because there's enough scale there. It's big enough. Institutional quality assets, they all have scale. Really, that's what makes it instant. That's what makes, when you hear me say institutional, that means like banks and other organized activities, that they only look at deals that have enough scale, number of units. So this actually protects your capital and moves you away from feeling uncertain when you're investing money. So, and I've been talking about it quite a bit lately. How do you multiply money? You have to put it in something where it's going to multiply. It's going to grow for you without you working for it. You've already worked hard for your money, so let your money work hard for you by multiplying. You do that by taking away uncertainty. I don't want uncertainty in my investments. I don't want uncertainty in my company, which my company, Bell Capital, invests money on behalf of my investors and us, and we make sure to monitor those things. And we chose the type of real estate, we chose this type of real estate to invest money in long-term, 10, 20, 30, 50 years, build our company around, to put together a $50 billion worth of AUM, assets under management, because I don't want the uncertainty of being in stocks. Not that it's bad, other people do it. It's just not me. If you like that stuff, I'm probably not going to be your guy. I don't believe cash should be sitting around in savings. I think it should be invested. I don't believe leaving it in a retirement account, hoping it's going to be there for my kids and kids, or me later on in the future, or Sharon, is a smart thing to do. I think that property is going to better provide for us later. Crypto, great. I don't have any crypto. Maybe later if I got some, great. But if I had to bet, I would take real estate over crypto every time. Like I don't want this burst in growth. It's nice, but that's not where I'm at, right? So you got to know what you're strong in and stay there. I don't want to go back to this. I've done this for years and years. I've cut my teeth on that, which makes me a better investor. Like investing my money, investing my investors' money. All the multifamily deals made way more money than any of this stuff did for me ever. This was good, but this was a hustle. It was a grind. This is transactional activities. And when you move away from there and you think about investing money, taking your hard-earned money and putting it in a place where it's going to be there for you generationally, for you and your family in the future, to me, this ain't it. You're gonna get tired of doing this, and you should. Like, even if you have a team and a group of people doing it like we did. Next, your own business. You got marketing, you got sales, you have administrative stuff, you got branding that needs to happen nowadays. Even if you acquired a business, business acquisition, you still got to deal with all this. You bought it, you still got to make sure this happens, or you lose your investment. There's still uncertainty in acquisition. No matter what's happening, even if you bought an existing 10-year business and it's running, you have to build a team, a finance department, manage your investors. You got to manage expectations of all the people that you have to keep this deal pushing, because now you got to hit investor returns. So that happens as well. A lot of uncertainty in that, right? Businesses can be disrupted, just like we said. So I'm not going to go through all this again, but no uncertainty when you're looking at the right deals. Preserve capital, you got cash flow, you got future appreciation, tax benefits, you got something that's not going to get easily disrupted and changed, right? With the type of deals that we look at, as well as you got scale and it hedges for inflation. So ask yourself that question. Go through this list. Just grade yourself here. Hey, and when you're honest about where you are, I know you got to do what you got to do, right? You probably have a business, you probably work really hard, you're probably hustling it out, you got some money sitting someplace down the line, or you're trying to grow that money while you grow your business. Dude, I'm telling you, take a look at this list. There's a lot of uncertainty in money, moving money around, and you want to put it in a place where you don't have to guess. That's why we're doing at Bell Capital. I created Bell Capital so I can help more people get invested in the type of assets that we are looking to invest in. So that way, you know, your money is multiplying for you, and you know your money is in a place where you check the box on all these other things, right? Number one, don't lose money. Cash flow, future appreciation, tax benefits. That's what happens when you become a partner in a big asset. And then you can still work on your business. And if you're flipping houses or you have a business, you still do that to make money. But you don't do it on the premise to where you're like, dude, I don't want 5 or 6 businesses. I want my business that generates money, that my working revenue from the business. And I want to take that other money and I want to have it multiply for me while I work my ass off, because eventually I get to stop and I get to do something else. All right. So longer video than I wanted it to be, but this is super, super, super valuable for you guys, because I wish I knew this. I didn't want to do this stuff, not because I'm lazy, but because I saw too many people go down the tubes and wish they hadn't. And I was able to still keep going over the years. I didn't have to constantly start over. And because I don't like the uncertainty of where to put my money and where to spend my time with my businesses, which has always been in real estate. All right. So if you guys need anything, go to bell-capital.com. And you can do two things there. You can hit invest now. You can see what's open, the fund that we have open. If you're accredited and you're liquid, go there. You can take a look at the documents and see how it works. Or you can schedule a call with myself and someone on my team, and we'll answer any questions that you have. We have an investor mixer coming up in Austin next week. And if you want to come, just go ahead. You can go to bell-capital.com/RSVP, and you can put your name on the list, you and however many people that are going to come. You should come there. I want to talk to you, man. I really do. I love meeting people in person, but why you should come is important, because you want to find out, hey, why are you looking at the deals that you're looking at? What is the biggest opportunity right now? How can you get involved? Can I invest through my IRA or my 401k? What does that actually take? And we'll be able to talk to you guys about that and answer those questions and have a good time. All right. So like this video, share this video, comment on this video if you need to. I really, really appreciate you guys watching it. Subscribe to the channel. We want to continue to grow the channel, and I can't do that unless I know you're out there. All right. So have a great day today, and let's talk soon.